This week in DFW real estate, rent rankings shuffle the leaderboard, the Mavericks Stars arena feud escalates to dueling lawsuits with Plano in the mix, national pending sales stall even as rates ease, and a new $5 billion master plan community is headed to Denton. I'm Jesse Showalter, and this is Jesse's weekly DFW real estate update for Monday, November 3rd. Let's get into it. First up, what you'll pay to rent across North Texas. According to a report by Zumper, which came out on Wednesday, where they analyze active listings from the last month to rank cities by how expensive they are now and how fast their rents are growing. Frisco now tops the region for one-bedroom rents at about $1,620 a month. Dallas checks in at around $1,480 a month. Frisco and Richardson are tied at about $1,500 a month, while Denton and Garland are closer to $1,120. The cheapest rents can be found in Benbrook, a suburb of Southwest Fort Worth, that had a median rent of $1,000, followed by Arlington at $1,070, Cleburne at $1,080, and Denton and Garland at $1,120. In 14 of the 22 cities included in the report, rents fell year over year. Cleburne had the largest year-over-year change of any city, with median rents dropping 12.2%. Despite being some of the most expensive cities, Plano and Grapevine both saw rents fall significantly by 4% and 7.8% respectively. On the other hand, Dallas rents grew the fastest of any city in the region, with median rents jumping 5% since last year. Allen, Irving, Euless, Burleson, and Hearst also grew, with only Richardson and McKinney where they saw no change. Now, from monthly payments to billion-dollar plays and a whole lot of drama. The AAC's drama just jumped to another level. After the Mavericks recently filed a lawsuit against the Stars for alleged lease violations and obstruction of upgrades at American Airlines Center, the Stars filed a countersuit calling the Mavs' earlier legal move an attempted hostile takeover of the American Airlines Center. The fight traces back to a collapsed $300 million renovation proposal and a dispute over lease obligations, plus the Stars' headquarters move to Frisco several years ago. Here's how we connect this to real estate. The Stars leadership says they're evaluating multiple cities outside of Dallas for a potential new arena after 2031, with Plano, Frisco, the Colony, Arlington, and Fort Worth as potential options. But Stars officials claim that no city is favored as of right now. New reporting spotlights Plano's Shops at Willow Bend site, a roughly 107-acre mall property, has emerged as a leading candidate for a $1 billion arena and entertainment district when the AAC lease ends in 2031. If that happens, think 365-day revenue, team-controlled adjacent land, and a full mixed-use ecosystem. As a longtime Plano resident myself, the idea of the Stars' new home being in Plano is actually kind of cool. That said, logistically, putting it there would only make the already bad traffic situation much worse. Whether the teams patch things up or go separate ways, this is a land use, financing, and district building story as much as it's sports. Now let's widen the lens to the national picture. Pending home sales were flat month over month in September and down just under 1% year over year, even as 30-year rates eased from their peaks. That's classic hesitation. Buyers are peeking back in, but they're picky, and job market certainty matters. At the top end, the first real cracks are showing in the luxury real estate market. Luxury sales slipped almost 1% year over year to the lowest August level in more than a decade of tracking, even as the median price hovered around $1.25 million and inventory climbed. Translation, more choice at the high end and slightly more negotiating power for buyers than we've seen in a while. All right, now let's take a look at rates. On Friday, October 31st, when this video is recorded, Mortgage News Daily's 30-year fix sits at around 6.28% after touching 6.13% earlier this week, the lowest in a year. We did get a Fed cut, but day-to-day mortgage pricing still aligns with bonds and went up slightly following the cut. The near-term theme is 2 steps forward, 1 step back, but directionally, it's improving. Now, let's bring in Mortgage Mike, Michael DeBacker, for what the Fed's rate cut means and his monthly market review.
This is Michael DeBacker with the Mortgage Mike Group, and I wanted to talk to you about the Fed coming out and decreasing the Fed funds rate on Wednesday, October 29th. I've had so many conversations about this, and many of my clients are saying, hey, I heard they dropped the rates. What are the rates? Let's buy a house. Let's refinance. And I get it. It is a bit of a misconception, though, that the Fed controls mortgage rates. They do not. The Fed fund rate is for short-term rates like credit cards, home equity lines of credit, automobile loans, not mortgages. Now, do we see an impact based on what the Fed does and what the Fed says? Absolutely, we do. But a lot of times we will see an opposite reaction than what many would expect. And the reason why that is, leading up to Wednesday when they made the change, you could Google what is the likelihood that the Fed will drop the rates. And a lot of economists were estimating above a 90% chance that they were going to drop it, which means people with a lot of money, they see that as well, and they've already moved their money into certain places based on that future event occurring. And then when it does happen, they move their money out. So we start to see an opposite reaction occur. If you invest in stocks, there's a saying that you buy the rumor, you sell the news. So the news in this case is the Fed officially dropping the Fed funds rate. So we see an opposite reaction with mortgage rates. So rates did go up on Wednesday. However, overall, it's been a very positive trend over the past couple of weeks, which we love to see. We are in a little bit of a standstill here with the government shutdown. Normally, the markets, especially when it comes to interest rates, they rely on things like inflation reports, unemployment, job creations, and we're just not getting any of those. So we've seen a steady decline, except for Wednesday when the Fed dropped the rate. But overall, we're not certain of where we stand because we haven't been getting those normal economic reports. So we'll see kind of the direction where we go once the government opens back up. But anytime you have questions about this, please always feel free to reach out.
Thank you to Mortgage Mike for that update. Michael is my preferred lender partner and can help you out with any of your mortgage questions and needs. If you would like to get in contact with him, please go to mmgloans.com. Now, for our new construction community of the week. It's a big one for Denton. Johnson Development is partnering to deliver Cole Ranch, a 3,100-acre, $5 billion master plan community on Denton's southwest side. The plan calls for roughly 4,400 homes, 1,200 acres of preserved green space, 26 miles of trails, 2 amenity centers, multiple school sites, 150 acres of commercial, and a 55-acre business park. Sales are expected to start in 2027. This will be one of the largest master plan communities in North Texas, behind Stonebridge Ranch's massive 5,200 plus acres and just in front of Fields, the development we spoke about a few weeks ago at just over 2,500 acres. Bottom line for this week, renters still pay a premium in the northern suburbs. Our arena saga is really an urban planning story in disguise. The national market is cautious but stabilizing. Rates are off the highs, and Denton just put a massive master plan on the board. If you found this update helpful, hit subscribe for next week's update and to continue getting more, hopefully, useful information. Thinking about buying, selling, or just curious about your home's value? Reach out. I'm happy to help you navigate DFW real estate. That's it for this week. I'm Jesse Showalter with Jesse's weekly DFW real estate update, and we'll see you next week.